But with that, let's also bring on board Mr. Amit Gupta, founder at Fintrekk Capital. Amit, I want to begin by asking what led to yesterday's fall, because I was reading this report that there's a deadline for disclosure of FPI ownership on February 1. Could that have been one of the reasons for the kind of sell-off that we saw yesterday?
Yeah, hi, good morning, Suyash. Thank you for having me. So the FPI deadline thing is not new. That has been in the pipeline for quite some time. SEBI made the changes in July, and then they had a deadline of 1st November, which was again postponed to 1st February. So I don't think that was really the reason. FPIs were selling even last week. Uh, in fact, the SEBI chief in September press conference, in the board meeting press conference, has already said that only 1% of the AUM of the FPIs is impacted by this. So I don't think that was the reason, even though there have been a lot of articles on that. In any case, even if certain FPIs do not disclose the beneficial owner norms, then also they have around 6-7 months to actually unwind their positions. So it's not that on 1st February they have to unwind all the positions. So firstly, the impact is only 1% of the FPI, and secondly, the unwinding needs to happen in over a period of 6 to 7 months.
All right, and all the high flying sectors, including your railway stocks, the PSU stocks, corrected somewhere around 5 to 10%. Do you think it's time to move away from momentum driven stock and perhaps seek valuation?
We are always a value conscious investors. So momentum is good when the re-rating is happening, when the under ownership is getting neutralized, or there is a mean to reversion in the earnings. But what is happening currently is that stocks are moving at a very random kind of statements being made in the public, either from the government side, which is misinterpreted or interpreted as very bullish. So just to give you an example, a lot of these railway stocks were moving last week on a simple statement made by the railway minister that there will be implying some new AI technologies on the railway travel. Now, these things are very random to estimate. We don't know what exactly the AI will do to these travels. We don't know whether it's going to have any impact on the revenues or profitability of these companies. So clearly, there is a sort of a mob-driven frenzy, momentum-based, which is going on into the markets. And I don't think, as value-conscious investors, we can actually participate. We had participated when these stocks were very undervalued, under-owned about 1.5 years ago. But in the last couple of months, we have actually sold all the railways positions in the stock. So we are not looking at them at even at fresh, because we think that there could be a significant downside even from the current levels once the earnings disappoint in these sectors. So we are not looking at buying any of these sectors.
Mr. Gupta, I'll drive your attention to the results that are expected to the Q3 results of Tech Mahindra. Now, analysts expect a flat revenue, but healthy margins growth are likely to boost net profits. Analysts are pegging net profits for Q3 FY24 at a growth, a QOQ, quarter-on-quarter growth of 54% at 763 crores. Revenues are expected to grow only marginally at 0.72% quarter on quarter, at pegging them at 12,957 crores. EBIT margins are likely to rise 6.98%, improving only 228 basis points sequentially. In turn, company EBIT is expected to grow to 904 crores, rising 49% quarter on quarter. As we speak, the stock today is up around 0.76%. What do you make of Tech Mahindra? What are you expecting, and how do you advise investors to approach this stock?
So we don't have a coverage on Tech Mahindra, but we do have coverage on other IT stocks. And my sense is that all the services IT company are tend to follow, Infosys, Wipro, and TCS results. So we might see some sequential revenue decline because remember in Tech Mahindra, 60% of the revenue comes from the telecommunication or the telecom segment, and that has sort of seen sort of persistent softness in the demands. The EBITDA margins which you talked about at the start, I think those EBITDA margins are sort of one-off kind of increase in the margins because company took a lot of business restructuring in Q2. The company had cut its America business into three units, while it consolidated its Europe telecom and non-telecom business into one unit. Overall, also, Asia Pacific and the Japan business were under a single management, while India was carved into a completely different business unit. So there was a lot of restructuring which happened, and as a result, the margins for on quarter-on-quarter basis are showing some sort of improvement. But these are one-time cost. So the soft growth may actually offset this one-time EBITDA margin gain. Overall, I think the Tech Mahindra result should follow on the same path that TCVs will be sort of flattish. The growth margins for the next financial year should also be sort of flattish, at least in the first half. And then we'll see how much once the rate cut happens in Fed, then we'll see how much of TCVs are increasing, the total contract value for the company, and then one can prioritize according to that in the portfolio.
All right, and Bajaj Auto is also expected to come out with its Q3 numbers in today's trade as well. The numbers are expected to be good and led by robust sales and higher realizations. Profit is expected to increase by about 32%, and revenue is also expected to see a high double-digit growth in late 20s, somewhere around 28% is what most brokerages are expecting. But Amit, first, what are your broader expectations from Bajaj Auto this time around? And second, the stock has been a clear outperformer. It was one of the best performing stocks in the Nifty 50 basket last year. In fact, on across all price chart compared to its peers, it has outperformed up about 90% or so in the last 1 year. In the last 1 month, in fact, it's up 11%. So what are your expectations from Bajaj Auto, and how is the stock looking on price charts?
Yeah, right. So I think Bajaj Auto, obviously clearly benefited in the past 6 months from this drop in the commodity prices. There was a sort of a strong demand because of the festive season as well. So the volume growth which you are seeing almost 30% year on year, that was mainly because the two-wheeler segment performed really well during the festive season. In fact, they took price increases also during the festive season, and that was well accepted by the market. However, my sense is that overall, if you look at the picture currently, post Q3, the positive momentum is actually counterbalancing with the decline in volumes of three-wheelers. And so there is a very lower export contribution currently into the market. In fact, recently when they have announced their monthly data also, there is a very clear indication that the exports are actually suffering. So my sense is that the expected realization may decline sequentially on a quarter-on-quarter basis, primarily attributed to how they are placed, because 60% of their revenue comes from exports and 40% only from domestic. So because of that geographic and the product mix, they might struggle in the current quarter, Q4 quarter. Obviously, there is a strong festive season again in south of India, in the Pongal and all that. People tend to buy two-wheelers according to that. But overall, because the rural sentiment is still sort of down in the dumps, one needs to be a little cautious from the current levels. The upside from these levels may be limited. The best news may already be in the price.
Mr. Gupta, with moving on the global scenario, with Trump winning his second caucus in New Hampshire, his ratings are high. Joe Biden's ratings are at an all-time low. How do you see that auguring for India in the times to come?
And for the US markets as well, I mean, they are at a record high. And I think at some point the market will start to factor in that Trump is perhaps going to take part again.
Yeah, I mean, it's only the start of the election season. We still have a lot many state elections, sort of constituencies to happen. Obviously, at this point of time, there is a leaning that Trump would be the best chance of getting elected in November. And the competition between the other candidates and Trump is quite significant at this point of time. It looks like Trump can have a sort of a uh, uh, have a slight advantage at this point of time. But I think there is still a lot of time to for this to happen. Eventually, the elections happen only in November, and the candidate will be finalized sometime in July, late July, early August. The policy making has been very dynamic as far as the US is concerned. But in the past, when Trump was there in the previous session, then we are seeing that not many against India decisions were taken. So one can expect that same thing can continue, but I think it's still too early to take a portfolio call on that. Right.
Too early to take a portfolio call whether Trump will return back in power. That's the view coming in from Amit Gupta. Sir, always a pleasure speaking to you. Great insights from you as always. Thank you for joining us here on Newsline.